Wait, I gotta get a couple things here. What's up, everybody? I'll let you guys get acclimated here. Talk some earnings. I gotta a few things I gotta dig up anyhow.
Liquidity, 512 million in revenue for the quarter, beats 501 consensus. November Tango.
That was net, I think. All right, what am I looking
Flare 21 cents is a 3-cent beat. These are all these each 545 million in revenue. This got 554 million consensus. EPS also missing for Beats or Bravo's in the hotel. There's a Clorox turning lower now on the weak guidance.
Oh man, nasty thunder over there.
The DLV, 78 cents for earnings, a 6-cent beat. Revenue also beating expectations, doubling a Bravo.
What's up, everybody? I've just let some earnings come in because we talk about earnings anyhow. So let everybody digest their earnings, their winners and losers on lottos or whatever the fuck you guys are playing. What did I do? Oh. Okay, what else did I want here? I'm not going to get too crazy with these charts. Just a couple interesting things. I heard net is what? Up or down? Up. Jesus, net. Give me a break. No, it's just with this stuff. And that's a beast. All right. I think let's see. Oh, I know what else. Hold on.
Lender Tree TREE, 250 million in revenue for the quarter, slightly of expectations. Earnings at $1.13 is well above a 97-cent consensus. Tango Romeo Echo Echo. Strategy MSCR announcing a $4.2 billion STRC at the market program. Michael Sierra Tango Romeo.
This. Did Apple report yet or no? Not yet, right? It was going to be special. Trump said we're making a lot of deals. We're wheeling and dealing.
Speaking of the White House saying we're making a lot of deals.
I don't want to post too many charts here. Hold on.
He just made a couple of other trade deals a little while ago.
What time's Apple come out? What's up, P? I mean, honestly, I'm just gonna start and forget about Apple. Earnings season. Oh, here, it's coming out? You think it's out now, Apple? Oh, Apple's in a couple minutes here. So, yeah, I might as well just wait. T, you back from vacation, T? Good now? Or, well, you got a whole month of the August. You go away still, right? Korea back to the Astros. I heard they were looking at him. What are they going to do with him? He's broken down, isn't he? I work from the trailer, have a Starling. That's amazing. That's awesome. I'm home now, but gone again soon. Very nice. I live vicariously through you. Yeah, I mean, from what you the way you explain it, sounds like it. I'm over here stuck in the humidity in New York. We're complaining about it for days now. The worst summer I've ever experienced in my life, weather-wise. I can't wait for it to be over. Disgusting. Mosquitoes, gnats, and it feels like pea soup out there. Rain, right? Cloudy every day. Rains. It's just miserable. Man. Miserable. Yeah, I like that dry air. I can't, the humidity kills me. I can't take it. Sucks my energy. I don't blame you. My problem is I had a little window to get the hell out of here, and I never made the move, and you get stuck. But I can't blame you. So yeah, I'm actually looking forward to. Well, you don't even get seasons anymore. I was ready to say looking forward to the fall. I used to love the fall. Was my favorite season out of all of them. The when you go back to school, the sweater, light jacket, football season type weather, that doesn't exist. Kind of stays hot. You get maybe a week of it if you're lucky, and then before you know it, cold. But I don't mind the cold. The cold, I don't mind. I don't mind the cold. All right, Apple, let's go. What do we got? A minute? Get it over with. Nonsense. Amazon looks like it's down. What about almost 4%? Coin down 23. Net is higher. Amazing. Amazing. What was the other one? I saw Reddit higher. Yeah, this Reddit kind of get left behind for a while here. And what else? I think Clack reported. Didn't Clack report? Let's see. Wow, Clack down. Oh, that was today down. I didn't even see that. 46, down another 14 in the aftermarket. The semis are having a tough time here. Oh, this INOD. This is kind of an underbelly name, right? Was up 6, down 5. Looks like it's giving that back.
Here's up by 1% ahead of their earnings.
And we're waiting on Apple. Ten seconds. Apple pop.
We're reporting. Headline is $1.57 for earnings, beating 142 consensus expectation for Apple. iPhone revenue 44.6 billion, will have a 39.8 billion consensus expectation for Apple. Total sales coming in at 94 billion, will have an 89 billion consensus, so blowout earnings for Apple. Greater China revenue 15.4 billion, a little better than expected there as well. Wearables at 7.4 billion, a little below 7.8 billion consensus.
I don't know what they're looking for out of Apple exactly, but looks like on the face
Apple
here,
CEO saying
better
that consumers are pulling purchases forward amid tariff announcements in the fiscal third quarter. Cook saying estimates purchases ahead of tariffs drove 1 percentage point, or nearly 10% of sales growth in the fiscal third quarter.
now looks like you gave back that pop, so I don't know what the hell they said. All right, it was worth the wait.
On the breakdown of Apple services revenue, 27.4 billion, a little better than 26.9 billion consensus.
Let me just mute a couple of these guys quick. You would think Apple would try to hold on to some green here. The stock has been dead money. Jeez. I don't know. All right. Let's get going here. A couple things. I don't need this up. I can get rid of it. Less confusion. Okay, good. Couple things I definitely wanted to touch base with you guys, especially STEAMROOM members. I like this Thursday webinar, kind of get everybody caught up before the weekend, and then we touch base on Sunday again for the members only meeting. So a few interesting things here. If you remember, we kind of just to get everybody caught up, we got to a point where it was getting really easy out there, a little too easy, especially in the speculative stuff. That always becomes a concern. The good news, and this is kind of what we talked about, they hosed down that speculative activity that got us concerned rather quickly. I don't know if you've taken a look at some of those hot meme names, but they buried all the option chasing there, okay, completely. And that's all it really takes to kind of get rid of that problem, or at least put a Band-Aid on the problem. What kind of, again, as we're going into earnings season here, I always, not that I'm cautious every earnings season, but I kind of tread lightly because you have so much headline risk, and especially when things have come a long way in a rally, you always can run into the possibility, even on good news, right? Sell on the news. But what kind of got me a little more cautious than I was a couple weeks back is, no matter what, okay, even if I'm not really concerned about a bearish outcome or scenario here at play, the upside, right, the long side becomes a lot more difficult, okay? And we talked about this. Like a lot of times, including myself, we look at the market, or we look at any stock, anything in the market, either as a buy or a sell, right? And there's a lot of in between that. And that's kind of where I think we are now. And let me show you one of the things that kind of worried me here. And we're already, honestly, in the process of kind of getting this fixed in a sense. But let me show you what I'm talking about. Oh, I got a different chart up here, but I don't know if you can make this out. We ran into an upside niner, right, on the S&P 500. Again, another area of a test where buyers may show some signs of exhaustion. Doesn't have to, and the end result of that doesn't have to be anything apocalyptic. It could just result in some sideways digestion, okay? But a lot of times, especially a rally that's a bit long in the tooth without a correction, without some sort of rinse, the probability or the possibility of a little lengthier consolidation or a deeper pull than we've seen so far is higher, right? Just logically speaking. But we entered that area. I think we touched on it last week that we were approaching that. We'd likely see that this week. All right, so you had upside niners on the S&P 500, I think in the NASDAQ as well. But you could already see a little selling has entered the fold here. I think this, and this is what I like to look at, especially now you get into earnings season, because you had all this bullish news out of the Mag 7, okay? And granted, right, Meta knocked the cover off the ball, but you got what I call the real market, right? The true S&P 500 is already kind of giving us what we needed to see. Okay, and you can see it has rolled over here a little bit. And again, I just think, even if it results in a pullback a little deeper than we think, I think ultimately it's a good thing that this process is already starting here. I'd rather have had it without the Mag 7 masquerading the indexes, right? Because it just creates more work. But we're already seeing, under the hood, we're already seeing kind of what was concerning me, right? We're already seeing the process of some cleansing there. And here's kind of what I mean by that. This, and if you remember, this is what really got me concerned coming into at the start of this year, right? The beginning of this year. This is S&P 500 correlation, right? And then you see me post a number of these charts, different type of indicators, different indexes. But generally, the main takeaway from what you're seeing here, okay, is that the easy money on the long side's over. Okay, that's a conclusion you can most definitely come to. All right. And the best way to explain it in layman's terms, in trading terms, so you understand what it means in price action, is you're in a market where the indexes may be up, but your stock is down or your stock is not participating, right? You run into days where the Dow is down, the Russell's down, but the NASDAQ's up, right? And then a couple of days later, the Russell's up, the Dow has some strength, but the NASDAQ is selling, all right? And you get this really sloppy type of action, okay? And again, I'm a little more conservative at my point in my career, right, than a lot of you young guns out there, okay? But it still should be looked at the same way, because the most success you're going to find, right, is when you have that tailwind at your back, okay? If you remember, for those of you who were around, and many of you STEAMROOM members will recall, that we had some concern early on in the year because correlation was so low, and the risk of something showing up where you get a spike in correlation, and that results in VIX higher and equity selling. Okay, but the beauty of a decent spike in correlation is when it stops rising and starts to roll over. That's where the easiest money is made on the long side. Right? That's where you literally, I like to say, you can throw a dart at any decent call sweeper activity, and you're probably going to find success. Okay? So that's the best time to get aggressive on the long side. And now where we're at, or kind of approaching here in a sense, is the opposite of that. Okay? Now, many of you may not care, right? As long as there's not some sort of a major drawdown or correction, you're going to be as aggressive as you were early on in this rally. But this is a good reminder of risk, right, and risk management. So you kind of want to be the most aggressive early on, and kind of like that, I explained to you guys, that funnel approach, right? Start to get less and less aggressive the further you pull away from that buy signal, that bullish signal. Okay, so now we're down here. Now, again, the reason why you can't short necessarily, all right, and it's a timing thing, like shorts are all the time, is that you can linger, right? We kind of saw that early in the year. If you remember, I kind of got really cautious, I think going into February, if I remember correctly. I don't think the market started selling to March, right? Something to that effect, right? So kind of going into the year, at the start of the year, I was getting more cautious, and the market didn't kind of really sell until a couple months later. Okay, so you can see how that's a difficult thing to kind of short. And just like I explained to you, where you kind of get frustrated on the long side, where the indexes are up, but your stock is down, you can certainly on the short side run into the problem where you shorted something and it's up even though the market's down. All right, so it doesn't make it any easier to take the other side of the coin here. Now, there is, okay, talking about the bearish side of things here, there is a higher probability of some sort of at least rinse showing up when you reach that kind of low base of correlation. Okay, even if it's short-lived, you get these kind of mini pops in VIX, right? A 1-2 day pop in VIX, kind of like we're seeing right now. And equities will sell off, but that doesn't mean it sees follow through, right? And you can see, look back on the chart, you can see how it can linger down here. And that's kind of what I'm looking at. We don't necessarily need a spike in correlation, kind of like we were looking for at the earlier correction, earlier in the year, in April, right? What we wanted to see then was a full cleansing, okay? Because not just correlation were low, we saw a lot of big picture signal caution as well, okay? This is different, right? We're not necessarily there big picture wise, but we could see some sort of short-term quick rinse, and that would be a good and a healthy thing. I think where it becomes a problem is if it lingers, okay? So if we do what we did earlier in the year and we kind of just linger down here, okay, what you're going to find is, again, very sloppy price action. Breadth and the internals are going to be horrible, less participation, and it's only a matter of time before some sort of correction shows up to resolve that problem. Okay, that's the biggest problem here right now for me in equities. And I think it comes at a good time anyhow, because as you get into the heart of earnings season, which we're in, and which we have discussed over the last couple of weeks, you're going to get that sloppy action anyway, right? Momentum is going to be dictated off reactions to earnings. Okay, so if you get kind of like what we saw yesterday, Mag 7, you get a positive reaction to earnings, that's going to dictate the momentum that next day, right? You're going to see a pop in those names. But kind of like the semis, right, which, or on the other side of the coin, you saw a negative reaction to earnings, right? You saw the opposite. Right? So you got earnings kind of creating slop anyway. I just think this adds to the mix. And it's something we should all be aware about right now. Okay. So again, I'm looking, and if you look back on this chart, I'm just looking for a quick reset here. Here's the thing, right? And let me go to the next chart. I think it shows it better. Now, this is that same indicator I just showed you, overlaid with 1 month realized volatility. Okay, you can see like what a 1 month realized vol trades in sync with correlation, right? So again, the takeaway here is what you're likely going to see at the least is these short-term pops in VIX and correlation, and they may roll over and go back to where they started again, but in trying to sit through and hold through on the long side is just it's not going to be something we want to do. Not in any size or being aggressive anyway. Okay. If we do get these kind of mini spikes, when they start to roll over, you're going to find like we have a weak window where there's some decent momentum and participation. right? So as correlation spikes and rolls over, kind of like these little spikes, you're going to get a couple week window where there's going to be decent participation and it's a better trading environment. Okay. But while we linger down here, the risk is of that spike, and that's going to bring higher volatility and some weakness. Okay. And so you're wondering what this correlation is. The reason why it's looked upon as low being a contrarian bearish signal, and when it's high and starts to roll over, contrarian bullish, is that when you get aggressive selling, what usually happens is they sell everything, right? The highly correlated sell-off tied to what the indexes are doing. 9 out of 10 stocks will do what the indexes are doing. Okay? And as things turn and become bullish, right, you get that high correlation to the upside, but it becomes less and less and less, ultimately becoming what they call a stock picker's market as a rally extends. All right, so that's the logic in what this is telling you, what this is showing us. All right, so that's first and foremost. A lot of these shorter term measures we were kind of signaling some heat, but we already have rinsed some of that these last couple of days here. This is from HSBC. You know, they got a minor warning signal here and not a big sell signal, but kind of we could use a rest or a little rinse over the short term. Another thing that's potentially going to be a problem, and again, I wouldn't even put it in the problem camp just yet, but if low correlation lingers, right, and we don't get kind of a decent enough rinse, you're going to have these systematic funds, vol control funds, and CTAs with a whole bunch of long exposure. Okay, you had massive buying from this crowd, especially from vol control over the last couple of weeks, right? We talked about that. Remember the McElliott note where he was talking about a huge amount of buying from vol control funds? Okay, so now you get that. If you remember off the Liberation Day lows back in April, you get that opposite effect now, right? The buying that they have to do, they get tapped out and they don't need to buy anymore, right? And what happens is they become sellers into flat tapes and into strength no matter what. Okay, the big risk is you get some sort of catalyst, right, where VIX is going to pop and you get some momentum on the sell side and you start breaching, you break levels to the downside on like the S&P 500. That's where these guys become a problem, right? Because they got a lot of supply to unload. And again, I say a problem, I'm talking about a 10% correction, right? That's what I'm talking about as far as the problem is concerned. Right? In the grand scheme of things, it's not the end of the world. Okay. But that's not necessarily what I'm focused on right now. I'm more focused on, you know, how correlation resolves here over the next week or two, right? Through earnings. Maybe we get some sort of rinse that kind of puts a Band-Aid on things for another month or two. All right, but it's something we definitely want to keep an eye on, and something we don't necessarily want to hold a whole bunch of risk into, in my opinion. Okay. What else we got here? Again, I showed you the correlation with the overlay of VIX, and you're kind of seeing that already the past couple of days, even with the indexes masquerading higher because of Mag 7, volatility net has been trading higher, right? VVIX as well. How do I get to that? Right? We talk about that divergence, right? With VVIX and equities. So a lot of times when you see VVIX bid and equities bid at the same time, it's just, again, a caution signal. Okay. And that's what we've been seeing. But now, again, today and even yesterday, you had selling in the overall market. Already we're starting to see some selling. So this is already taking shape here. These are Sharpies. Okay, and I'll get to what they're doing in equities in a second, because big picture wise, it's not a sell signal. Okay, but what they've been doing is over the last couple of weeks, they're starting to add VIX exposure. Now, Sharpies commercial hedgers always have exposure to VIX, right? They're hedgers. They should have. There are very few occasions where they take off that exposure, like we've seen a couple times here, and that's a bullish signal for risk. Okay. What they've been doing the last couple of weeks, after being a little bit short volatility throughout this rally, they've been adding exposure in vol. Okay. And again, I just think what it tells us, and let me go to Sharpies here because I might as well bang them both out. What it tells us is, I don't have Sharpies here. Hold on. That even though they're not hedging in equities, I'll show you where they are here because you guys are going to want to see it anyway. Even though they're not hedging in equities yet, they are taking advantage of that low correlation and VIX selling to add some exposure in VIX while it's low. Kind of to Mick Elliott. If you've been following what Mick Elliott's been saying of recent, you should, if you got a book, right? Because he's talking to institutions. He's not talking to people trading their own account. You hedge when you can hedge, not when you need to hedge, right? And it's been a nice window here that if you need to put on some insurance and protection, you want to start doing it now and not wait till it's too late. And I think that's what we're seeing happening right in the market right now over the last few days. Here's Sharpies and equities. Okay, not long much, but they haven't got aggressive as far as hedging yet. Okay, and then what that tells us is big picture wise on the positioning front, it's not a problem. Okay, as bullish as it feels out there, the takeaway from Sharpies is that it's not a crowded trade. The whole market's not a crowded trade right now. Okay, if Sharpies here were aggressively slapping on hedges, again, that adds to the probability of a legit correction, right? Around 10%. There's a higher odds, better odds for that. Okay, but we're not seeing it from them yet. Okay, a few other things that kind of caught my eye that I told you on the last webinar that we were keeping an eye on. Liquidity. Okay, now again, with everything else we were looking at coming out of the April lows, on top of positioning being lopsided to the bearish side, sentiment, you name it, you had liquidity, and a lot of these liquidity measures shot out of a cannon. Okay, you can see it here. Boom. And no matter what liquidity indicator you look at, they all look the same. Okay, and has been expanding and rising ever since, right? As we've been showing you. Last week, we talked how it kind of topped out and almost had a little double top here. And now you can see what it's done the last couple of days, kind of broke trend. Okay. Now this looks ahead. It's I think a 10-week lead on here, right? So sometimes it gives you some time to make some moves if you need to. Again, if we see something like this, okay, at the least, what you're going to see is a lot of that speculative appetite we've been seeing out there in small cap names and in micro cap names. Okay, a lot of the crap. Let's be honest, that's likely going to die down. You're going to see a lot of these things lose a lot of volume and just float lower. All right, any pop, they're going to find sellers. Okay, so as kind of the air comes out of liquidity in a sense, that speculative appetite is going to start to wane. All right, you may see it too in Bitcoin. You're more than likely the correlation between this and Bitcoin is extremely high. All right, so something definitely to keep an eye on here alongside everything I just mentioned, especially if you've been playing in these smaller names, which a lot of us have. All right, that's where I mean, a lot of us have been picking up the money of late up until some of these big caps caught fire here recently. All right, and that's what you're kind of seeing, right? You kind of, if you remember, we looked at Mag 7. Let me show you Oh, Mag 7 positioning, believe it or not, coming into earnings wasn't all that bad. Like usually this is part of the hottest crowd out there. Here it is. All right. So you had a really nice washout in Mag 7 when that's all anybody wanted to buy at one point. So they came in, you came in with a lot cleaner look positioning wise with Mag 7. Now the semiconductors, which you guys know, we talked about that the last couple of weeks, that was completely different, right? The semis came into this earnings season a pretty crowded trade. Hence why I sold the Soxel that I had. Okay. So we're already seeing a lot of the stuff we wanted to see that we talked about over the last couple of weeks start to cool off. Speculative names, semis, a lot of these type things. So that's liquidity here. Definitely want to keep an eye on that. We talk about that every day, obviously. And here are financial conditions, something else to keep an eye on. Again, alongside everything we just looked at, financial conditions eased aggressively, loosened aggressively, right? You went from tight financial conditions going into the Liberation Day lows, and then almost like a QE program was implemented. Drastic move, okay? But what happens is after a move like that, right, what you start to see, especially when you start to see liquidity start to come in and things like that, financial conditions will start to grind tighter. Okay, right? So the dollar was crashing. Now you got a little bit in the dollar, right? So some of the things that go into the loosening and tightening of financial conditions, you start to see them start to tighten again. Okay, again, ultimately putting some pressure on equities as a whole. Now, the indexes could get tricky, right? Because if there's a bid in Mag 7, right? If they're any little dip, they're going to buy Mag 7 because of what Meta and Microsoft and all them reported. The indexes aren't going to come in that much. At least the S&P and the NASDAQ aren't. Right? So you got to understand that if you're trying to short the indexes off a lot of this stuff. Again, it's never easy on the short side. Never. Okay? So just keep that in mind. But, something we want to keep an eye on, even us long onlys, is if this, starts to creep higher again, it's not going to make the long side any easier. Right? Okay, this was a sweet spot. What we had here was a sweet spot where all these things lined up, and any bid you look to buy. I mean, any dip. The problem was there weren't many dips, right? That was the main problem in this round. And this is, I think, the last one I got on here. We looked at, again, off the lows and looked at it recently because it kind of got washed out. These are almost like the systematic funds. These are the Ridex funds, and they position money, bullish funds, bearish funds, depending on what they're looking at in the market. This is the bearish side of the funds, the bearish flow. And as they were adding huge bearish exposure into the lows, huge unwind, aggressive unwind there, right? And you kind of just died on the floor here. They, of recent here, they've been adding some of that bearish exposure back on, okay? As they do that, it can put pressure on equities. Now, if they get back to an extreme, right, once that starts to unwind again, you're going to get a nice tailwind at your back. But in the meantime, while they're adding bearish exposure, you can see it in the price action in the market. All right. So that's the gist of everything. I didn't want to bomb you with too many different things on here. Again, the most important to me is correlation. That's kind of been it for me. Because again, these other things you look at, and sometimes you look to see if you can trade through some of this stuff. You know what I mean? Sometimes it really is a stock picker's market, but it's not as difficult to find the right stocks. What this is telling us is that even if it's a stock picker's market, it's not easy. You understand? It's more frustrating than finding success. All right. And, we talked about this, right? We talked about how the writing was on the wall that you had just kind of this melt up where all these things we were looking at were going to resolve to the other side, right? With CTAs and vol control funds. And lo and behold, you had July, which is usually a good month for equities. You're going to run into August, which seasonally can be some trouble, right? Ahead of September. And you're not going to be in the best of shape. All right. So that's kind of where we're at now. Any little rinse in the interim would be constructive, right? If they kind of front run some correction that everyone's looking forward to in like late August or September, what's going to happen is they're all ready to front run that and they'll rip their faces off in late August, September, right? So any continuation, I think, to what we're seeing over the last couple of days continue, I think ultimately is a good thing and may postpone a larger correction that we were pretty much lining up and running into based on what we've done over the last couple of months. All right. So bottom line, I still think, if you're a long only player, especially, I think it's, again, more wait and see, allow things to resolve. Okay. And, again, just pay attention to the signals. If things get there quicker than we thought, right? If they happen now, again, you need to ignore that noise when everyone's now sounding the bearish horn, because it may be over by that time. It may be over. All right. But big picture wise, again, from what really kind of got our juices flowing back in April, it's still lingering out there, right? And that's that institutions really haven't stepped into this market much at all. Okay. It's been predominantly buybacks and retail, right? If anything, hedge fund short covering led the way over the last couple of weeks. You still have that backdrop. Okay. Sharpies are not aggressively hedging, right? Which would be telling you a completely different picture about sentiment and positioning. So a lot of the big picture stuff is still alive. It just, we kind of need to take care of some business in the short term, I guess is the better way to put it. Okay, if we ignore it in the short term, I think then we're going to pay the price. We just prolong what's ultimately going to happen a month from now or whenever it shows up, and it'll be worse. Okay, and the other thing we haven't, right, because Powell still hasn't cut rates. Okay, and it appears that's what everybody is waiting on the macro side of things. You really, that's why institutions haven't really, especially those macro funds, haven't jumped back in this market yet. Even though small caps have done better, they haven't completely broken out. Home builders, stuff like that, found a bid, but kind of been selling off of late. And Powell didn't do any help with the Fed meeting this week. Okay, but the market looks forward, and even though Powell wasn't dovish, we knew we weren't getting a July cut. If things start pointing to a September cut and they start to price that in, you're going to start to see these things catch a bid, and possibly the Russell start to heat up. All right. So I think it's a good opportunity to chill, be nimble, and at the same time, be patient and allow some setups to set up, plain and simple. Wow, there's crazy thunder out there. Anybody have any questions on any of this? Anybody not sure on anything we looked at here? Me explaining it? I'm not. the best at explaining this stuff in gamble everything on PLTR earnings. So there you go. And I know LT, you're just trolling, but that's literally what it's been, right? Like, did I post the thing here? Hold on. That's literally what this market has been over the last. Oh, come on! I don't even know what my log is on here, but that's literally what this market has been over the last couple of weeks. It's just straight up gambling on the crap of the crap, right? Squeezing. We talked about it, right? People touting a dollar stock going to 100 on social media and everybody hopping in, right? I mean, they got shafted. Let's be honest, right? Dollar stock went to 4. Everybody's buying it at 3 and 4, and it's at $2 3 days later. Okay, it means nothing about the long-term aspects of the company. That's not the point. You know how people are. They think the stock's going to 80 next month. And then when they're down 50% on it in a couple of days, they're not going to be too happy. They spit it up, and then maybe you buy it long-term if you're interested. But you had a lot of that crap going on, and you see it. It's been retail speculation. It hasn't even been retail buying of equities. It's been pure speculation. And the good thing about that is the speculation can get hosed down quick, really quick. You understand? It's not a 1999, 2000 problem. What happened in 2000 into the highs of March of 2000, retail bought equity. The options weren't that popular back then. Was buying equity with 3 hands and holding. You understand? They were buying up the equity market, buying up the tech stocks. It wasn't where their options get wiped out to 0 because they're in weeklies. Right? So, where is it here? I wanted to show you on here. I think I have it here. Wait, what's today? I posted it on Twitter. You guys probably saw it. Oh, here it is. Yeah, they're just buying calls everywhere they could. Like, I mean, $2-3 is not cheap enough for them. They got to buy front month weekly calls or whatever they're buying. Oh, and you guys remember, but we've been through this, okay? A lot throughout even the up market last year, right? Or earlier this year. What was it earlier this year? But you remember, we saw like these type of names just go ballistic, right? And everybody pile in, and then like this needed to happen, right? It means nothing about the company longer term. It's just everybody is chasing highs here. It just doesn't continue to do that, right? Yeah, I mean, I guess I don't, Mag 7, the problem for me with Mag 7, okay, it's not a new theme. You understand? Like, even though positioning is cleaner, more than likely, everybody owns Meta. If you've been bullish Meta, you own Meta. Right? You haven't really sold Meta. Now, maybe you sold to look to buy back cheaper, but that's even over with. You understand? Like, these names are already owned. You're not getting a wave of new buying that's going to come in kind of like we saw in 2023 and carry the market for a long stretch, in my opinion. You're going to need other things. Now they may hold up, but I'm saying you're not going to get, and I don't know. I could be wrong, but the likelihood that you get something like this from these names here, it's a lot more difficult now. You're talking about $4 trillion market caps. So they're probably going to get choppier, even if they're bullish. They're going to get choppier, and any dip they may find buyers, but it's going to be difficult for this to carry the market. That underbelly has, especially if the semis are out of favor, right? Like that's a big part of the excitement of the market. So you're gonna, wow, you hear that? I don't know if you guys can hear that thunder. It's crazy. You're gonna need other things involved. Now, I don't think, again, that was a problem back in 2024. First, like the beginning of when was that? Let me see here. 2024? Yeah, like you remember there was a stretch where the breadth was really thin. It was only Mag 7, and there wasn't really any rotation into any other things. I don't think that's a problem here, right? We may go through a little stretch of it, but I don't think that's a problem we're going to have to deal with. I think money eventually is going to find a home, somewhere, right? Like we've been seeing, the financials, the industrials, all right? They're going to find home. But ultimately, to get like the institutions to back in this market in an aggressive way, it looks like they're waiting on the Fed. It looks like they're waiting on the Fed. But that. I'm not even talking about other spots of the market, non-tech, right? Because you got a lot of tech even ignored. You got software names that have been serious laggards, all right? You just need other parts. See, here's what happens. Look how they just got hot, right? Off these earnings. CDNS, CLS. Look what these things have done. Look where they are now. You understand? So when they're not finding new names, they're not getting into different stuff. There's only so much buying they can do before these things are parabolic. You need other parts. You need other stuff. Now we're getting IPOs, right? This market's a lot different than coming out of the 2022 bear market. Even on the speculative side of things, like these rare earth mineral plays, right? We talked about that. Like that's kind of an area of the market that's not meme related, right? There's spec appetite there, like real spec appetite. You had Trump pounding the table again there today. These names were big winners, right? But what I'm saying is this is what you need to see. You need to see other areas, right? Whether they're tied to AI or tied to whatever, start to get attention. Especially if you're playing names. Right? A lot of us, and me at this point in my career, it's almost to the opposite side of the extreme now because I worked on it throughout my whole career. But, a lot of people in this game, what they do is when things thin out, they end up starting to concentrate on the same stuff. And what they end up doing is a name they bought and sold 3 times, now they're buying 100% higher than where they traded it a month ago, just because there's nothing else to buy. And you don't want to do that. You don't want to do that. That's something you want to avoid. All right. So what we may see coming out of earnings season, and I think, again, if we go through a little digestive period here, instead of kind of just pushing it along until we get into mid to late August type of thing, if we get it now, what I think is you're going to start to see money being put to work rather quickly. A lot quicker than if we just continue to slow grind, melt up higher, and this market becomes even thinner and correlation goes even lower, And then I think it's going to be a bigger problem whenever that needs to be resolved. The longer it goes, the worse it is, right? Because you never know when that's going to crack. And when it cracks, it's going to be something you don't want to be stuck in, especially heavily long. But if we do get a little digestion here, a little resolution here, I think that going into possibly September, when everyone's all bared up, you're going to see money already being put to work. And who knows, right? Maybe Powell's ready to cut there. They could be gunning all sorts of things going into that Fed meeting. All right. So again, you don't want to get bared up here. You want to be cautious. That's all. Right? You want to be cautious and patient here. Cautious and patient. All right? Wait for some better setups. Because a lot of the stuff that we like right now, you have to chase a lot higher. A lot higher. So, and I think, again, like we were saying for the past 2 weeks, I think it's a good time for it because of the earnings risk, right? Like you want to play, take some shots in earnings. Like LT's saying, he's joking around, don't put your whole account in it, but you like PLTR earnings, throw a lotto on if you want to make a donation. But that's the extent of it, right? You don't want to leave black and blues here. You don't want to leave black and blue. Okay, again, that's kind of how I look at it with this, right? Like down here, I stay really nimble and I focus on just intraday, right? I'm just biding my time. If I can make some money being nimble, that's gravy. And then once we get that kind of pop, and which also coincides with a rinse, with the with VIX popping and correlation popping. Once that's over and done with, that's where you got another sweet spot. Yeah, it may not be as long as this stretch, but you get a month or 6 weeks of nice tailwind. When this happens, right? When you get kind of these pops and then this, that's a nice tailwind you end up getting. You know what I mean? Kind of like VIX, right? What happens? What do we see? A lot of times. This is what you see. Okay? Doesn't always have to be something like this. But listen, if you get that, what happens? You get a few days. So that 1 week, you get a VIX, big pop in VIX, equities flush, and then it's over with. And then what happens after that? This happens, right? Whoop. 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 Right? Whoop. And what do you think equities look like while that's going on? All right? When you get that VIX unwind, what happens in the equities? So that's kind of what I'm sitting tight here for. All right? You get a little VIX bid, even if it's something like that. Then when that unwinds, that stretch, it's going to be a lot easier to make money on the long side. Make sense? All right. While here, okay, here, especially with correlation at low, what are you dealing with? You're dealing with a thin market. You got to get lucky and pick the right stock that goes up. Even if you're right, you got to get lucky that stock goes higher. Especially during earnings season, somebody may have shit the bed in that sector and it's taking it down. That's another risk on top of it. And you also run the risk that some catalyst shows up and now instead of getting caught in a little mini VIX pop, it's a larger VIX pop that you got to sit through and get black and blues over. Just logically, risk reward wise. Does that make sense? Okay. And I know a lot of you youngsters and YOLOers or whatever the fuck you guys call yourselves these days, you don't care about that shit. But for those who actually want to approach this game with some seriousness, you gotta have these seatbelt measures. You have to. Otherwise, you're gonna blow up accounts. If you want to blow up accounts, blow up accounts. Rich Ross, Tommy 200. He's so bull. He's been all bulled up for a while. Rich Ross said 200. Oh man, Rich Ross. He's as bullish as they come. Hey, put him and Tom Lee in a room. I don't know what the hell comes out. They come out with SPX 10,000. Yeah, but, well, the thing is, Stacy's asking a good question. Buy the dip. What's a dip? You understand? Like, again, the definition of a dip these days to most traders is here. Okay? Stock comes down to here. That's a dip. Buy the dip. But the stock is up threefold over the past 2 weeks. You understand? That's not a dip. That's not a dip. You know, names that have gone bananas here, you run the risk of at least some decent consolidation. Okay? Because here's what happens, Stace. All right? This was a dip. This was more of a dip. This is more of a dip. This is more of a dip. Right? And then you're sitting through this. And that's what you end up running the risk of. Or at any time in any of these things. All right? Any of these names. So what I think is a lot of these big winners, okay, you should either be in them or leaving runners if you like them at the least at this point. If you don't own these things, I don't think you're looking to buy them off dollar pullbacks, in my opinion. You know, and you know how it goes. What's going to happen is they're going to buy little dips. They're going to buy little dips. It may work out the first time, will work out the second time, right? They flipping them, whatever. They're making some money, and then they're going to go up with a basket of calls, right? And that little dip is going to be a little more than just a dip, and it's going to give back everything they made, and then some. That's how the story goes. This, stock like this. Again, I'm picking on Oklo. I'm not picking on Oklo. It's one of the big winners. I have nothing against Oklo. I have nothing against Oklo. I promise. I'm always. It seems like I'm picking on Oklo, but any of these names, here was another one, right? If you remember back in the day here, but here, okay. Like, after this move, that's it. It closed. If you liked it, good for you. Hopefully you have made some money. You like it that much? Maybe you left the runner. Maybe you left the position. But after this move, the stock goes from $1 to 22. In my opinion, you shouldn't be looking at this name for at least a couple months of digestion. Right, and you're in hockey sticks, yeah. But even even winners, right? Even good stocks, Stace. The crap ones stay in hockey stick. But look at Microsoft. You know what I mean? Like, and this was the best of the best, cream of the crop here, Microsoft. You're talking about the AI player out there. Like, Microsoft is as stud as you're going to get. But, you know, a big company like Microsoft went from 200 to 450 or whatever it did. It needs to digest. You know, this you're not early here, even if it continues higher. Okay, you still can't make the case you're early here at $540. You can make the case that you're going to hold on to what you have at a better entry, but it's tough to make a case to buy at 540 right now. You know, tough. So again, if you're looking at these same names, it means it's usually a good sign to chill out. Right? If you're looking at stocks that have quintupled and you've traded and you like and you made money with, and you're looking to buy them again, it's likely because you can't find anything else. Irene did. Yeah, you know, again, yeah, like you guys know I liked Irene. Like I like this stock. I played it numerous times. I like Irene. But, you know, stock did go from 5 to 21 literally in a straight line the last 2 months. Now, is there a chance Irene can go from 16 to 20, 25 here? Get you some news. Trump talks about it. The CEO meets Trump on the golf course, of course. But the odds, the probability aren't in your favor when you're buying up here after a move like that. All right? We're looking for the next Irene. We want the next Irene. You know, not everything. Here's a common thing you hear from retail, right? Because they go from a trade, but then when they get caught, it's an investment. You know, oh, you know, I'm going to hold on to Irene. That's why I'm buying it up fivefold. You know, where were you all? Where were you? If you like Irene, where you been? Yeah, I mean, Pabu, again, Nvidia. You know, I'm not going to sit here and tell you that there's anything bad about Nvidia. I just think you've had the stock's gone from 90 to 180 here. You know, what's the market cap of Nvidia now? Like, if you like Nvidia, you had ample time to get in Nvidia. Why are you looking now at 190, 180? Why? So you didn't like it at 100, you didn't like it at 110, 120, 130, 140, 150, 160, 170, 180, you like it? You saw something at 180 that caught your eye? Right? That's the only argument I'm going to make. Oh, but I'm going to buy it and hold on to it. You're just catching on to the Nvidia story now? Yeah, and that's kind of what I'm talking about with like institutions. They haven't been buying anything macro related, anything tied to the economy. They haven't been buying shit. They've been buying Nvidia for the past 5 years. Hence why the stock has done this. You know, can Nvidia blow off here? Yeah, it can blow off. That's not good. That's not good. You're playing musical chairs there in a blow off rally, right? If these things blow off from here, you want to sell into that, in my opinion. You get into cash, no? You take risk down. You don't add into that. Like even AMD, right? Was on everybody's do not trade list. Oh man, you hear that? God is angry. So at the least, we I think we need to see. You hear that? You hear that thunder? We need to see. Even on the good looking stuff, even the good looking underbelly stuff that's come a long way. There's good looking underbelly names all over the place. You just need some digestion. All right. But if we get some digestion and then we start to see new ideas, new setups, watch how quick you're not paying attention to NVIDIA at 180. All right. It's all risk reward. I mean, everything you got to look at from a risk reward perspective. If you're not, you in my opinion, you're doing it wrong in this game. But that's what's happening now, guys. What do you think over the last, at least, especially the last 3 weeks, right? 4 weeks, at least 3 weeks. Everybody thinks they got gold. Oh, I think I figured it out. I know what to buy. I know. It's the market. It's not you. It's not your system. It's not your algo or your AI program. It's the market. It's been really easy. Right? As is usually the case when you get a big spike in correlation and then an unwind. So right now it gets a little trickier. Yeah, I mean, we'll definitely take a pullback. You know what I mean? If something shows up, we get a little bit of a pullback here. Even again, in the most bullish of environments you look at, right? Like, look at this. You get this big rip, you get a little pullback. You get a little pullback. Here's even, you're talking about where markets where QE was implemented. You get a little digestion. Like this here, okay? It doesn't look like much. You get this, and all these call buyers here chasing names, their calls go to zero. This. That's all. Just that. And then what it allows, it's like a launching pad for at least like a month or so of minimum of a nice tailwind. Sometimes more in stronger markets. Yeah. But like as if we do get some digestion here, as it's underway, we want to keep our eyes open, right? Are they buying stuff in that digestion as post earnings, as we're coming out of earnings season? Are they buying stuff, right? Maybe they're buying certain pockets, right? Like that space sector or something else that we aren't familiar with right now. Things pop up. And ultimately, maybe it is, kind of the Cap's point. Maybe you get some sort of little rinse here, right? Or that goes into consolidation. And then that sets off the kind of the broad rally where you get the macro stuff involved. Yeah, LiDAR, when they were buying all the crap heavily shorted names, there was some flow. They were flowing all these things. Literally every single one of these things has seen flow. Every single one. But that, again, that's not bullish, Papu. That's not bullish. You know, unless you think every single one of these shitty names all of a sudden becomes real, because they were buying all of them. You know, again, that's a warning sign. It's not a bullish sign. When they're buying all of these names like they're all the same company with the same fundamentals, you know they're not. You know, it's purely momentum, short squeeze driven. Yeah. Yeah, and especially, right, you have a rally kind of to the magnitude we saw, right? You had a lot of money made. People start to take some profits. And for a little piece of that money, you can go and buy a LiDAR at $1, right? Or any of the other names we just looked at that went from 3 to 5, 6, 7, 8. It doesn't take a whole lot of money. And now with options and retail, I mean, look what they did to this. You see what they did to this? Look at this. Okay? Literally, this thing starts to get on people's radar because it's another beating the crap name. Okay? Then you got a couple of guys on Twitter who are all gun-ho pumping it to the whole social media crowd. And then you create a frenzy like this. Bink goes to 5. A couple of days later, you're trading at $1.80. Right? So what, LiDAR and open? Both are legit buying, you're telling me? Or any of the other names? You understand? They're not bullish on these names. They're squeezing them. I don't honestly, like, again, I don't know. Maybe you know the company, and down here, where were you at $1? I would say, first of all. Now the only reason you're looking at it is because it went from $1 to $6. But you missed it, in my opinion. Even if it goes higher, you missed it. No, but if you like the technology or whatever, you can't like the fundamentals. It's impossible. It's impossible. Okay? The estimate was for $1 million. You have more money probably in your bank account, Papu. They were looking for $1 million in revenue, and they missed and announced 20 grand, $20,000 in revenue. Okay? I could go sell weed on the street right now and make more than that. Okay? 22 grand. Right? 22 grand in sales, Papu. Can you do that? So, my opinion, I would, especially if it went from $1 to $6. That's the last thing I'd be looking at. I don't care what you tell me. You know, again, this squeeze probably saved them. Maybe they were going under. I get it. People are talking about the technology, you know, in robotics and all that. But there's probably better names than this pig. Like, this is a disaster. You know? This thing reverse split already like 5 times. This is a disaster area. A complete menagerie. You know, you don't want to be looking at this. You know, you want, for investments, like, don't get me wrong, you like a speculative name you want to tuck away, you find, you know, a couple over your lifetime, you tuck them away, you roll the dice, but the money's made in real growth. You know, the money's made on names like this, especially if you find a little early, right? I mean, the CLS was a $30 stock. Now it's $200. But look at their numbers, okay? They reported $3 billion, okay? LiDAR reported 20 grand, $20,000. CLS reported 3 billion, and they reported earnings on top of that. Yeah. So you want to be looking in that arena. Again, here, this thing has hatched already. I get it. Right? But so has a lot of everything else out there. But I'm talking about like names you want to invest in. These are the type of names you want to try to find 20, 30, 40, 50 bucks. Once in a blue moon, you'll find one 10. But that's where, again, if you could hold it, that's where the real money's made. They're real. See, people forget, like stocks, you're investing in a business. It's become a full-fledged casino out there. But that's fine. But if it's a casino and you're treating it like a casino, you're getting in and out. You got to trade. You don't buy crap and hold it. You know what they call those type of investors? We have a name for those type of players. Suckers. Or you may refer to them as bank holders. Yeah, I don't know. Again, I'm not the one to really ask about that. If you like the technology, because I really don't know them, Papu. I'm being dead straight with you. I don't want to lie. Like I traded this one, OUST. I think they're involved in that, but I'm not 100%. But I'll keep you in mind. I promise. I'll ask. And whoa, what the hell's going on here? The end of the world's here, my friends. Soon. JC is on his way. All kidding aside, Papu, I'll ask, and if someone pops an interesting name, I'll relay it over to you. You're looking in that LiDAR space, right? You guys heard that, right? Crazy, man. This weather's nuts. Crazy weather. Another thing, like as you guys know, we talk about it a lot. Some of these IPOs, again, you don't want to buy them after they quintupled, but some of these IPOs, lesser known IPOs, they come out, they kind of go dormant. Nobody's talking about them. Nobody's interested in them. Maybe you end up seeing some flow in them with some time. Now, those are the names you want to look at. Right? You guys remember we were talking about this one, turned out to be a nice winner in cybersecurity, RBRK. Right? So like a lot of us in the steam room who played RBRK, we still have exposure in, and we're holding it. You know what I mean? That doesn't mean I'm going to buy RBRK at 100 now. But, because we like it had some promise, you hold it. You're talking about a $30 stock that's 100 now. Like this is the type of stuff you want to look for. That other stuff, again, for trading purposes, you get nice squeezes out of them, sometimes home runs. You get in at a nice spot, you get out. Yeah, VG. A few people in the steam room like that. Stock VG. So you like this? This is a nice name. Leave it alone. I think, what is it? LNG related? Energy related? Yeah, I'm not selling my RBRK. I know that. So, I wouldn't sell it. I know you're probably busting my chops, but VRNS. Yeah, I know that stock. That's another good one, right? VRNS. This is a stud. PANW is buying. Cyber. Look at this beast. Let's see. Yeah, it's a hot group. Sahil, you know any decent LiDAR names that aren't crap, pure speculation like that LiDAR? Anything that is in this arena that he can buy instead of this disaster area? Oh, I was just talking about CDNS. That's a stud, that stock. You know, this thing's a stud. This and the CLS too. They're both studs. Like they're great growth stocks, these things. You don't know any LiDAR? I'll Papu, if I find something, I'll ask around. I don't know anything either, so I don't want to lie to you and make up some crap. All right, guys. I'm gonna go watch the rain and miserable weather again. Oh, you got CLS too? Oh, so you bought the both of them. Yeah, I like this CLS. I like the CLS a lot. You know, this thing is just, they buy every dip. It's a great hold name, you know, great hold name. Yeah, I'm gonna let you guys go now. All right. So we talked about a few things. Some of the things to keep an eye on here. Correlation is my biggest short-term concern, but it already looks like we're trying to get that resolved. You know, we're in the process. So more importantly, if we do go through some sort of pullback, you don't want to get too bared up. You want to ignore the noise. And then that's when you want to start looking for opportunities again, right? I mean, right now, yeah, it's been tough. It's been tough. And it should be, because that's when you get down here in these neck of the woods, it's really tricky. It gets really tricky. But if we get a little VIX pop, little continuation here, and we get a little pop in correlation, that's going to open up the window for a nice little tailwind for at least a few weeks, a month. And you can start looking from decent trades and hopefully some new buying. Yep. Sahil, I'll see you mañana, Sahil. Everybody, Papu, everybody have a good night. As always, thanks for stopping by, talking some shop. I can't believe it's Friday already. These weeks whistle by. Life is just whistling by. Yeah, again, have a good night, everybody. I'll see you, STEAMROOM members, mañana.